You have been told that the stock market is a ladder. You climb it rung by rung, buying shares of good companies, holding them tight, and waiting for the tide to lift your boat. This is the comforting lie sold to you by financial advisors who earn commissions on your compliance. It paints a picture of meritocracy, where patience is rewarded and diligence pays off. But look closer at the architecture beneath your feet. The ladder is an illusion. The market is not a ladder. It is a hydraulic press. And while you are busy climbing, the machine is designed to squeeze the liquidity out of your pockets and transfer it upward. The system does not want you to win. It wants you to participate. It needs your capital to fuel the engines of those who already own the factory. To understand why you remain stuck, you must first see the hidden hand guiding the dance. The modern financial system is built on velocity and leverage, not just value. When you buy a stock, you are entering an arena where the rules are written by those who control the flow of money itself. Central banks print currency, injecting it into the system through large institutions. This money flows into assets, inflating their prices before it ever reaches your paycheck. By the time your savings hit the market, the price has already been bid up. You are buying at the top of the wave created by someone else's cheap debt. This is not bad luck. It is structural design. The gap between asset inflation and wage growth is the friction that keeps the middle class running on a treadmill, working harder just to stay in the same place. Let us strip away the jargon and look at the mechanics using a simple visual. Imagine the economy as a vast ocean. The central bank turns on a hose, spraying water into one corner of the pool. The water level rises there first. Those standing in that corner, the institutional investors, the insiders, the creators of credit, get wet immediately. They swim in deeper waters, their boats rising effortlessly. The water then slowly ripples across the pool to where you are standing. By the time it reaches you, the initial surge is gone. You are treading water, trying to keep your head above the surface, while those in the first corner are already sailing away. Your investment is merely an attempt to catch the leftover droplets. This is why traditional diversification often fails to create true wealth. You are playing a game where the starting line is miles behind you. The psychological trap keeping you here is the comfort of predictability. You crave the safety of a 401k match and the steady hum of index funds. This comfort is a sedative. It numbs you to the reality that you are renting your financial future from a system that charges interest on your ignorance. You believe that if you just save enough, you will be safe. But inflation is the silent thief picking your pocket every second. The cost of living rises faster than your savings account can compound. You are not saving. You are slowly bleeding value. The system relies on your fear of volatility to keep you passive. It teaches you that risk is dangerous, when in truth, the greatest risk is remaining ignorant of how money actually moves. Shift your perspective now. Stop seeing yourself as a victim of these forces. Start seeing yourself as an observer of the machinery. The market is not a mystery. It is a mechanism. It responds to incentives, liquidity, and human psychology. When you stop reacting emotionally to red and green candles and start analyzing the flow of capital, you wake up. You realize that volatility is not your enemy. It is the source of opportunity. The chaos that scares the beginner is the signal that alerts the strategist. You begin to see patterns where others see noise. You understand that debt, when used correctly, is not a shackle, but a lever. It allows you to control more assets with less of your own energy. This is the difference between working for money and making money work for you. The hidden tax of ignorance is steep. It costs you decades of your life. It costs you the freedom to choose how you spend your time. Every day you remain asleep, you pay this tax. You subsidize the wealth of those who understand the game. But there is a path out. It begins with a fundamental identity shift. You must stop being a consumer of financial products and become a strategist of capital allocation. This does not mean chasing hype or gambling on memes. It means understanding the underlying value of assets, the timing of market cycles, and the power of asymmetric bets. It means accepting that safety is an illusion, and that true security comes from competence. From beginner to billionaire, the journey is not about accumulating more dollars. It is about upgrading your operating system. The beginner sees stocks as lottery tickets. The intermediate investor sees them as ownership in businesses. The master sees them as tools for leverage and influence. To move up these levels, you must shed the skin of the passive saver. You must embrace the discomfort of learning, the risk of thinking differently, and the responsibility of managing your own destiny. The market will always be there, churning, grinding, transferring wealth from the impatient to the patient, from the uninformed to the aware. The question is no longer whether the system is rigged. The question is whether you will continue to play by its old rules, or whether you will learn to write your own. Wake up! The press is waiting. Decide if you will be squeezed or if you will be the one holding the lever.